Especially when you have family, man, got kids, so that always comes first. Never sacrifice on that for nothing. What's good, Rich? Richard in the building. OG Mark in the building. What's up? What's up? Let's make sure that the Facebook crew can get on deck, and then we'll go ahead and get this jumping because I'm actually pretty tired just getting off the road here. Thank God I made it back safely. The weather was crazy out there. Um, Crazy weather out there. But we back. Let me drop this real quick. Make sure that our Facebook crew is with us. Everybody been good this weekend? Thank you. Thank you. All right. Let's go ahead and get this popping. And I am almost finished, ladies and gents. All right, just had to make sure we had got those invites out. Oh, you know what? Let me let me send another invite out to the candy lady. For y'all don't know the candy lady is, that's my mother. She said she want to watch me this weekend. So let's make sure the candy lady get her invite. All right, because we don't want nobody to get cut. You feel me? When your mom is the candy lady, you can get cut. I don't want nobody to get cut, so we gotta make sure moms get her invite. All right, cool. All right, so mom, she just got an invite. We can get this thing rocking and rolling. And I have my live over here so I can see you guys in that chat. All right. What's good, crew? What's good? What's good? All right, all right. Let's get it popping. So, welcome to GamePlan Sunday. Today is June 28th, and we're going to kick off our session like we always do. Talk about what occurred over the past week, what we noticed coming down in the pipeline, and how can we use this information to make some money. We're here to make some money, right? Let's do what we got to do. Make sure y'all hit that share button, hit that like button. Make sure you hit that heart button so the algos can set off, and hopefully the value that we give into the marketplace can catch fire. I'm gonna need your participation for that. So thank you guys for showing up. Anyhow, fresh off the road here and just getting into the zone. So I'm trying not to take up too much of you guys' time. But what was interesting for last week, right now, what we're looking at is the ES, okay? The S&P 500. So started off pretty good, but then it fell off the cliff. What was the theme last week? Coronavirus resurgence, okay? So the resurgence of the coronavirus, I call it coronavirus 2.0. And I kind of already expected that as they're opening the economy, more people are going to get the coronavirus. So this kind of spooked off the markets. You had you basically had the sell-off, Now, the interesting thing is that although the coronavirus cases, have came back, the thing is that the mortality rates are lower than previous times. So, I'm trying to give you some good news within the bad news. The good news is that not as many people are dying. Okay. And, the market should be able to stomach that, right? Okay. More cases, but not as many deaths. So really wasn't expecting the market to really sell off on that. In particular, the market has been so irrational these days. You never know, right? And so good news is not good news anymore. It's the not so bad news is been good news. So I really didn't think that it was going to sell off like the way that it did, but it did. But it needed to. It really, really needed to, right? What's up, my man Dustin? You on a boat ride? Oh, man, you having fun out there. Take some pics, man. Post it on the site. So yeah, so that was the key thing that has spooked the markets out, because now what the markets is trying to price in, we got to understand that the markets is pricing in future. It's kind of give you an insight on the future. So I think that what the markets is trying to price in is that, I call it the lockdown 2.0. Now, I don't know if we're going to go lockdown 2.0, but we started to see it happening. I think Wes was in the group. Mark was in the chat room. By the way, we got the new chat room that's on the website. So if you haven't subscribed, make sure you subscribe. The chat room is live all day long, 24/7. Get in there and get some trades so you can make some money, right? Or post and interact and things like that. Anyway, we're in there talking about actually having a little debate about the if they're going to lock the economy down. And the interesting thing is, as soon as we were talking about it, we started seeing, I think it was Texas. We saw who else was it? Florida, I believe Arizona. Y'all know the states. They're starting to go into more of a 2.0 lockdown round, right? And even where I'm at, right, and Carolina, mandatory mask requirements all across certain states. And so you're starting to see them trying to tighten up on things. And the question is, are they going to, tighten them up even more like how we did before? Are we going to go back into a lockdown 2.0? I think that's something that we do need to worry about because obviously they're trying to contain this thing. And, they had it pretty much contained when they had it on lockdown. They open it up, the cases start to come back out. That means that, you're going to have to go back into lockdown. Now, that's obviously not positive for stocks, right? It's not positive for the markets because companies got shut down. But we already know who the winners have been. It's been, the Walmarts and the Amazons. But it's still just terrible for the smaller, businesses. And we're starting to see other businesses that's shifting online, right? We had Microsoft came out and shutting down all of their, brick and mortar stores. And it doesn't mean they're laying people off, but they're just transitioning into online. So online is where it's at. You guys know Wall Street Jet Boys. We've been online for 3 years now. A lot of the technology people are using, we've been using for over 3 years. Our software we've been using, the stuff that we use is better than Zoom and all this other stuff that people are using because we spend premium dollars on it, right? But a lot of people are starting to do it now. So we're seeing consumer behavior is changing, and the stock market has been speculating on those companies, and they've pretty much been the winners of the transitioning of the new normal. So we're trying to calculate what the new normal is going to look like. We still don't know. The markets has been very enthusiastic. They claim it's based off of coronavirus, vaccines, but really the what's really been happening has been the Federal Reserve's pumping the money into the markets, and it's been going into the financial systems. And again, we talked about last time we met at Game Plan Sundays. Don't bet against the Feds, and that's been a whole key. Don't bet against the Feds. The Feds is in there supporting it, right? So the asset holders are going to make the money off of this, and that's pretty much what's been happening. Now, we have a lot of irrational things happening. I was talking to Mia earlier today, and in the group on the Facebook side, we was talking about, all the speculation, the Robinhood investors, traders, I should say, because they're normally just kids. And y'all know when we first started, a lot of kids started coming around talking about Robinhood. Y'all know we don't teach off no Robinhood. Nothing against Robinhood. I don't want to throw no shade on them because, some people may be able to make money. But again, we use, you guys see Thinkorswim right here. We're using, top of the line stuff that we can get our hands on, right? And so that's what I encourage people to do. But some young man killed himself because he lost a lot of money, in trades. And it was actually the fault of Robinhood, faulty, technology that was, that's giving him, making him, I guess, appear that he lost more money than he actually did. Not too sure the full story, but it's sad whenever somebody, walks out in front of a train and just die and killed himself, because he thought, thought it was on financial ruin. But this is nothing new. The same thing happened in the dot-com bubble. Everybody and their mother's trying to jump into the game, but nobody wants to learn the game. People want fast, quick, and easy. And, you can't fault them, right? You got over 40 million people that's out of work right now, and they're looking for ways to try to make some money. And y'all know we've been doing this for some years. I mean, trading takes years. It takes time to get. The markets are evolving and changing every day. I'll have to stay on my toes. I got to stay learning, right? I'm teaching and I'm still learning because we're all learning. We're on the go, we have history as a guide, but, that's just a guide. We're in real time. So we got to deal with real information and handle according. So anyhow, you have a lot of these speculators in here that's, pumping the markets up too. That's, benefiting off of it, right? We talked about a couple of Game Plan Sundays before. We had, these guys coming out talking crap about Warren Buffett, right? Whether you agree with Warren Buffett or not, I mean, come on, this is the biggest fish in the sea. You can't possibly say that he's a dummy. You know what I'm saying? Like that's just asinine, right? And you got people that's, these guys coming out and they making, big money and like, Warren Buffett is a dummy because Warren Buffett is sitting on a sideline. Now, one has to ask, why is someone like a Warren Buffett sitting on the sideline? You're talking about a multi-billionaire, okay? You're talking about not just a multi-billionaire, but a multi-billionaire who owns companies that own companies that own companies, all right? Who owns employees, the best analysts in the world. So obviously he has tools that none of us have access to, okay? Yeah. He has access to tools and research and data that we have no access to. So he's obviously seeing something that we can't see. And whatever it is that Uncle Warren Buffett is seeing is telling him that right now he don't see anything worth buying. So therefore, he's sitting on the sideline, cash heavy, until the right opportunity, comes by. That's smart money. You want to follow smart money, all right? No matter, even though you see people flashing money, don't fall for the trap. I'm telling you, right? The Jonathan says a day trader. You got a lot of day traders that's they can do that, right? But you can't follow a day trader's moves because it's like this. You got to be sitting right next to them with your computer trying to follow their moves. You can't follow their moves. You shouldn't follow other people's moves anyway. If you know how to trade, you can trade, all right? But you can't just listen to these guys who's calling geniuses, idiots. That's just asinine. But at the same time, it's hard. How do you debate that if they made money, right? So yeah, you have rich fools. So you have people that make money. That doesn't mean that you should go and do that, right? You know what I'm saying? You got guys like, no disrespect to him, but I'm just saying you got guys like, Floyd, Mayweather, who is, multi-millionaire, one of the richest, probably the richest athlete out here. I think he got like a third grade education. You have rich fools out there. That don't mean you should do what they do. Okay. Anyhow, but you've seen a lot of speculation that's, pumping this thing up. So let's get to the charts on this real quick. We saw the S&P 500, get that rally up here, boom, came down, and then it rallied up into our 618 Fibonacci levels right here at this zone. Okay, we caught a buy. It's called a sell trigger right here. That red arrow says sell. Okay, so let me just clear it real quick. This is the resistance zone, the Fibonacci extension. Boom. We saw that the stop price did not clear it, so that means our Fibonacci levels held to be true. Okay, cool. Price came down to the 100 moving average, right? Which is also here at this Fibonacci support zone. But the 618 was this resistance level right up in here. And then we caught a sell trigger. So that was our cue to start hedging, right? And so, you can short this if you want. But again, we want to, let this thing come down and break support. Right now, okay, it's already broke the 200 and it's coming down to the 100. The key to watch here is this 100, right? This blue line that you see right there. So we'll dial in on an intraday chart so you can see a little better. But basically, if this breaks, all right, that's not good for the markets. Okay, this is the stock market. So we see it come down, and I got a support zone that's right about here. Okay, support zone is right here, this pink line right here. All right, so this is going to be the support zone. So that's what I'm going to be watching right now live as we speak. The futures is down slightly. This isn't bad. Okay, it's not bad. Nasdaq down 32 points. If you see the Nasdaq down overnight 200 points, then it's going to be mayhem in the morning. So we don't see anything like mayhem. Okay, but it's just a breather, and it's due for a breather. The key is, are we going to hold support? And if we hold support, then that will be entry to another high. We can go back up here. Now, fundamentally, I still can't see, why we should go higher, because I can't see these companies generating, earnings that justifies, these high prices. So we're definitely due for a pullback. And so ideally, if you can get a pullback into this zone right here that I have, which is about 2630, right here will be, a better point to buy. Remember the key, if you're, again, looking at the stocks, you want to buy low, sell high. You don't want to be buying up here at these extensions, right? These are the sell-off points, right? You want this thing to come down. If it comes down like that, this would be the first level that I'm looking at. That would be a support zone. Okay. And so I am looking at that. I have my trend, that's going down here. I do have momentum going down, shifting down, stochastics and things like that. It is shifting down. So I am looking at this to break further. Okay. So we'll see. I don't think we're going to see a sell off like this though, But I think that, we can see a nice pullback like this, and this is healthy, right? The trend, still good. But, that'll be a buy point to get back into the equity side for, look for some longs. But on the, let me pull up the Russell real quick. Because if we look at the Russell, it's already trading under its moving averages, okay? Let me just remove a couple of these lines to clear these charts up a bit. All right. So this is the Russell, and you already see that the price is trading under its moving averages, right? And so again, the key is to see if this is going to break or is it going to hold. If it breaks, look for some shorts, and I would prefer those, in the Russell index basically, because this one here is already under its moving average. Okay. And let me get some zone. Let me get a level. All right, here. All right, bingo. So I'm looking, under the 1300 mark right here at the 127 extension for the floor right there. And we may be able to pull out some more. I haven't even done any work because I'm just getting off the road. But let me see some zones if I can pull some support zones real quick. All right. I need more. Let's take this high. Okay. So I still, don't have, any good extensions that I can pull off of this chart, but 1340 would be okay. It's right around the corner, so I see that's a clear spot. So I'm gonna leave that here to see if we hold right here at the zone, and if that fails, then we'll come down here to about the 1250. So I'm still looking at about that 1250, this green line right here. All right. What else do we have here? The Nasdaq. Let's pull up the Nasdaq real quick, which I haven't seen. All right, here we go. The Nasdaq. That's where all the bread and butter's been at, the Nasdaq right here. And of course, we had our extensions up in here, and it started plowing through. It tested that, it got rejected, and it plowed through, but it didn't clear my second zone. It got rejected here and it started chopping around right up here. And then, right now we're seeing this huge break. So the Nasdaq is starting to break, and I think if the Nasdaq break, then everything else is going to fall. The Nasdaq is definitely due for a pullback here. So, this will be your first level around a 9,400. Let's see, we're at 9,800, so 400 points. This would be like a first zone, and then this would be your second zone right up here at the 618 at this zone right here. So if you look at the moving average, around the 100 moving average zone will be, a better support zone. So we would like to see this come down right here. I mean, that's more advantageous point, because again, all of these, these tech stocks, a lot of them not even making no money, right? A lot of them are really not. Some of them are, but some of them are not. This is really the big ones that's doing their thing. But we got a squeeze that we're going into, and we see the momentum is starting to shift downward. The trend is downward. We had this down right here. So now I don't want to short the Nasdaq, but I do think that is due for a pullback. Okay. All right, Pop. Cool. So we got that in there. So this week we were in the chat room. For you guys who have not been in the chat room, make sure you get in the chat room. And we had Jonathan that was calling out some good plays. Mark was calling out some good plays. I forgot who else was in there calling out some good plays, but we had, people participate. So I want to thank you guys for participating in that. And we'll take a look at that here in a few. But one of the situations that we were looking at was gold. Okay. So we're taking a look at gold right now. And I had some setups in gold that's also posted in the group on Thursday, I believe. And so gold was is definitely a nice play. And I was telling people, going over the weekend, the only thing that I felt comfortable with carrying over the weekend was gold. And we see, we got into position, and you're still good. The market is down, but gold is actually, making some money for you while the market is down. So gold is supposed to be your hedge. So think about that. If the market's going down, how can I make money? Gold is supposed to be the move right there. These levels in here, let's see, still using old levels, and I'm gonna keep these old levels in here. Basically what we're looking at would be, from this high to this low, projecting out to this extension zone to be a profit target, profit taking zone here, and then another profit taking zone right up here. Jonathan said I had the best plays. Thank you, sir. Hey, you know what? I love the fact that everybody get to participate. You know, a lot of trading groups, you got the gods, you know, and people paying $200 a month, you know, to subscribe to these services, and then you still losing money. And you ask them questions, you can't get your questions answered and all of that. We don't have to deal with that at Wall Street Jap Boys, right? So again, we want to be totally different from what they're doing. But anyhow, everybody get to participate. So definitely, I encourage you guys to participate. You see some setups, let your colleagues know. I can't catch everything. You feel me? My eyes are not every play. So, but if you can catch something, it's a good play. Like Jonathan called out some good plays. Hey, you know that's what it do. Teamwork, make the dream work. So anyhow, I got this zone up here at gold at that top. We had this extended squeeze. I hate long squeeze. Y'all know how I feel about long squeezes, right? I don't like those long squeezes. I like the little short ones. Like, you know, this is a nice squeeze right here, and the stock fired off really nice. But when they're long, they chop around, you know. So we had all this chopping, and it's just making it longer. We know the power's pent up in there. We caught the buy trigger right back in here that was telling you, hey, get into gold. Look at how gold is produced off of that. We got the fire right here. So it's a fresh fire. The question is, can gold move up into the next zone, which is this 1822 level, right? So, and again, this is paper gold. This is not physical gold. Understand that the paper gold is not reflecting accurately what real gold is doing, the physical gold. The reason why we've been net buyers of gold and silver is because of supply and demand. There's not they can't get the gold out the earth fast enough. There's so much demand for gold right now. It's only right that it goes up based off of the laws of supply and demand. Okay, so to me, it's been a no-brainer. It's been what I've been doing. So, definitely want to have you some gold in your portfolio. Now, gold again, 1785. You need $1,700 for gold for 1 ounce. Okay, one little coin. All right, so almost 1,800. So that's telling you how weak the dollar is right now. Right, so you want to exchange that cash that you have for some gold. That's that's a key thing. But if you can't do that, right, then you have a whole list of plays that we have right here in the playbook right here. All right, you can get the paper gold, make some money off of the stocks, right? So we have some plays, some setups in gold. So I'll take a look at some of those real quick. And again, this is carrying into this week, still good. All right. Let's see, Newmont Corporation. You see the Newmont Corporation play. We got a target right here at the 618. That's $62. Right. The floor is right here. Okay, the floor right here at the 100 moving average. Okay, that's the floor. We got a buy trigger right here that was saying, hey, get in. All right, momentum shifting upwards off of that down slope with a squeeze. The trend is up, so all the stars are in alignment. Bingo. Looking to ride this thing north, at least to the 618, and then possibly to the 786. But that 618 should be a hard resistance level possibly. So just keep that in mind. Newmont Corporation. And then you can do the oh crap, let me in there. You can play GLD. GLD is a popular one here. Not my favorite right now. Let's see. We had GDXJ, which is in a squeeze also. So this is in a squeeze setup that we have here. So again, that's a play. Let's see. Kinross Gold is another squeeze setup that looks similar to the Newmont Corporation right there. Again, you see the squeeze that's right here in formation. You see the momentum shifting up. The trend is up, right? Obviously, the floor is right here at this 100 moving average. Okay, we have a buy trigger that's told us to get in here. Okay, the 618 is resistance, and we're testing it. It's constantly testing it, but it has squeeze power that should be able to push it through. All right, so again, that's another one. So yeah, so anyway, these are this watch list over here. Okay, if you don't have it, we can definitely get it over to you. But any of these names, you can play those. When we edit the videos and play it back out, again, you can pause it and look at it. If you want to copy that, that's fine. But on top of the gold, you already know silver has been the best bang for the buck. And the setup in silver it looks even cleaner than the one in gold, right? Although I do have some lines in here that should be cleaned up. But this is what I'm looking at on silver, okay? And y'all know we've been net buying silver way down here. We caught the move in silver way down there. Today, this is where we are on silver right here. All right. So we've been, killing on silver, and it's continuing to move north. All right. So the floor in silver has been right here at the 200 moving average on this yellow line. I'm going to just stretch it across. All right. So we saw price move down, tap that, come back up. We have a buy trigger. That arrow says, hey, buy me now. Okay. What else do we have? Momentum shifting upwards. Buy triggers that says go up. Momentum shifting on a squeeze going up. Plus, we got the squeeze right here. Squeeze. All right. And so when the squeeze fires off, we should get a blast off. Okay. So $19 should be here pretty soon. We're at $18 right now. We've been buying silver since almost $12 an ounce, basically. So again, physical assets, silver, net buyer. But again, you can play some of the names like SVM, WPM. Those are some of the names that you'll play on silver. Bonds has been something that members in the group have been playing. I want to say it was Justin or Jonathan. One of y'all was calling out the bond setups. So I can't remember who was calling out the setup in bonds. Bonds are supposed to be, a safety feature. So when the market is going down, bonds are supposed to be going up. Okay. So that's what you're seeing here. There was a buy trigger that's right here. We obviously see that the floor has held here, even though it breached back here, but it came back. Price came up to the 618, snapped back down to the 100. Then we got that buy trigger right here. And now we're seeing price starting to try to climb back up to the 786. Now, what's interesting is that lately, gold and equities have been moving together. Normally, they don't move together. And that's what's been making it a little conflicting to trade this market, because gold and equities normally don't move together. Whenever stocks go up, gold normally goes down. Whenever stocks go down, gold normally goes up. And it's been pretty tricky because they've been moving together. Normally stocks is down, gold is down. And that's been consistent, pretty much this entire, pandemic thing here. We even had that crash in silver. That's why we started buying silver, because we knew in real life, not paper silver, not the stocks, but in real life, there was a shortage on silver and gold. There's still a shortage on silver and gold right now. So get your hands on some if you can, because it's going to go higher. But anyhow, they've been moving together until Friday, Thursday and Friday. They're starting to move away from each other. Right now, we got equities. Actually, it was Friday. So we got equities that's down right now. We got gold and silver that's up right now. This is the way it's supposed to be. All right. But until Friday, in fact, Friday throughout the day, both of them was it Friday? Or maybe I'm thinking Thursday. They were both down. Equities was down. I think the Nasdaq was down like 250 something points. And gold and silver was down, but they were down like, 1%. They were down like, a percentage point. They were down really low. And so that was an indication of strength also. So that just reconfirmed, what we were looking at. All right. So again, that has been the case for bonds going up, and then the dollar. Okay. So the dollar, this is the tricky thing, and this is what's throwing a lot of investors off, because what we're looking at here is the dollar has two outcomes. Okay. So the dollar, it can go up or it can go down. Now, when the Feds is printing all this money, the value of the dollar is supposed to go down. I mean, it's quite naturally, because they're creating inflation, and it eats away the value of the dollar. I mean, the end game is going to be them destroying the dollar, but that's not this week, right? So again, end game is that the dollar is going to be destroyed. So it's going to continue to lose its value as they continue to print all this money and everything. That's another reason why you need to get your hands on some gold and some silver. Okay. But at the same time, a lot of countries their debts are denominated in the dollar, and to service that, they got to get their hands on dollars. So there's been an anticipation. I got chopped up in this zone right here, because they didn't know what was going to happen. But we know that these countries, they're going to need to get their hands on a dollar to service their debt. So it's anticipating, demand for dollars to get the price to go up on the dollar, because we saw this wild spike from down here all the way up here, right? And that was the beginning of that thesis right there. Anyway, that was in March. But that whole move played out. And then we got this sell off here the past 2 weeks, which is interesting because the stock market went up when the dollar went down. So and the dollar goes down, stock market's been going up, right? And if the dollar goes up, stock market is going down. The funny thing is that gold has been following the stock market, so that was like it's tricky. Okay, so that's a divergence that throw you off. But so I try to pay attention to the bigger thing, the macro thing, and I'm looking at reality, supply and demand. So I'm making my decisions based off of not just the charts, but also the story. Okay, so because I understand that story, I continue to lean in the way that I'm leaning into supply and demand. All right, and the way that I'm seeing the supply and demand, I'm seeing the Fed's printing money, inflation eating the value. Okay, so that's been working out. But if you see here, dollar look like it's forming a double bottom, and there's a buy trigger right here. Okay, and so if the dollar goes up, then the stock market goes down. That's what's been happening. So this is another thing to pay attention to. If the dollar continues to go up, I got this zone right here that it's got to bounce to this resistance level first before it can go even any higher. But I don't know if it's going to go higher beyond that zone. So UUP, again, if you want some exposure in a dollar, this is the UUP, this is the ETF for that. Okay, so this zone right here, again, this goes up, equities go down. All right, so I guess that's pretty much my spiel for this week. Let me see what's coming down the pipeline. You guys know that this is going to be a short week. Okay, Independence Day is on Friday. The markets will be closed. Okay, so you want to try to get in and out of your trades before Friday, okay? Because Friday the market's not going to be open, and if you're going to have any positions to carry over an extended holiday, I would prefer. I can't tell you what to do, but I prefer to hold a hedge, like I'm holding gold right now, and we're going to make money off of this, right? So extended weekend, too much that can happen. Chaos can happen. We already got all the civil unrest right now. I don't know if you guys saw the police disbandment out in Minneapolis. That's interesting, right? Disbanding the police is not positive in a way that people are afraid of their life, afraid they're not going to have security. So then what do people do, right? We're trying to calculate the human action. People are afraid they're not going to have protection. So what they go do? They start buying up all these guns. Okay, they start buying guns, and then you start buying ammo. And you guys know there's been guns and ammo shortages, right? So again, I don't know, what your rights are, but if you got the rights to it, you may want to, exercise your right to bear arms. Okay, because people are afraid of security. So it's a lot of uncertainty that's in the markets. Again, that's the long-term thing. I'm bearish on this whole thing long term. However, there's some money to make in the in between time. So we got the civil unrest that is that variable that I can't calculate. 4th of July, Independence Day, on a normal day, people outside busting guns. Okay. We got 40 million people out of work that's protesting, and you got all this tension with police, and they showing all this footage that's inciting a lot of stuff. But people busting guns on a regular, 4th of July, I can imagine people are going to be busting guns and possibly even killing people. I'm not too sure. I hope that doesn't happen, but just understand that that's a risk variable. That wouldn't be positive on the market. So anything that I'll be holding over the weekend, if I choose to hold anything, will be, again, a hedge. It'll be something like gold and silver. All right. Because it's too much uncertainty. People get crazy around 4th of July holiday, these fireworks, guns, you don't know what the hell is going off. Somebody shooting choppers or they popping fireworks. So anyway, just be careful out there. But that's what I'm seeing for that. So just understand we have a short week. As far as the economic front with economic data, we do have, let me check my calendar. What's important? Okay, ISM numbers, Chicago PMI numbers for June will be on Tuesday, June 30. Let's see. We also get the Consumer Confidence Index for June. And again, the expectation for all these readings are positive, okay? And they just may be. Let's see, ADP release numbers. The ADP jobs numbers are also expected on Wednesday, and they're looking for that to be positive news. FOMC releases the Fed's minutes meetings. Let's see, this is going to be on Wednesday. Consensus forecast 449, reading up from 43. So again, that's more positive news. And then Thursday, we have the Bureau of Labor Statistics releasing job reports for June. They are expecting for this to be positive, and the Department of Labor will also go over the initial job list claims. So again, I think that we have some positive news that's coming down the pipeline, but again, you have to factor in, lockdown 2.0. That's risk right there. Seeing how that's going to impact business, but we have positive news. I think that they're expecting. Anything negative is going to rock the market. So we don't know how that's going to play out, but that's just what the Wall Street is expecting. A lot of positive news on those numbers. The reason, the causes of those things is a different story. I understand we're still in a recession right now. And then also the elections. Do not forget, elections is in November. That is a major risk. I don't know if you guys ever traded during the election season. I believe Mia has and Mark has, but you guys know it's action packed dynamite. Election season, the most volatility you're gonna see is going to be November. Now, and I find that to be interesting, is because Wall Street is not factoring in or pricing in the markets that Trump could possibly lose the election. And that's dangerous for them to actually even not price that in, because with the polls, if you go to sites like predicted.com, Trump is down really, really far in the polls. Now, I actually think that Trump will win, but the odds are against him at this point. Everybody in Vegas is betting against Trump. Now, I don't know the reason why. I mean, whatever the reason is, the reason. But if you look at it, he's not doing good. Not as far as that go. Now, one can argue, hey, Trump was down against Hillary, and then he surprised the world and won. I mean, maybe he can pull it off 2.0. I don't know, but I think it would be too arrogant for you to lead in that way and not hedge your portfolio for that kind of disaster to happen. And not only could Trump lose, but also the Republicans could lose they could lose the Senate also. So these are all things that Wall Street is not even factoring in, but other entities are pricing. And like I was saying, with the betting sites and everything in Las Vegas, they're betting on Trump losing. And historically, no president who's ever undergone a recession has been reelected. Okay, not for a second term. They've all lost. And so again, the odds are just against his favor. Plus, you got 40 million people out of work. And so politically, to do the right thing is not good for politics. What's good for politics is to print the money, get this money in the hands of the people. But printing the money and getting the money in the hands of the people is basically socialism, and it's tricky for Trump because, you're gonna have to cut more stimulus checks, But the Democrats are going to actually take advantage. They're going to try their best to take advantage of it because they're going to try to, they're going to try to take everything, right? Hey, you print money, so you might as well print money for all these social programs. In fact, while you at it, print up reparations, print up all this money, right? Not understanding the long-term consequences of these decisions. They may present short-term benefits to stop, short-term pain. It's kind of like putting a Band-Aid over a wound, but it's a gaping wound, and you're not treating it properly. You may need surgery, and we need surgery right now. That's not what's happening. They're going to keep on printing money. Their solution for everything is to print the money. And that comes to an expense to the taxpayers. So we have to think not just short term, but we also have to think long term. The crown here is the U.S. dollar. The U.S. is, on the brink of losing its world dominance for the world reserve currency. China is the rising power. We've been talking about this, for a whole year now. So yeah, if I say the wound is Melania, you're right. But China is on the rise, and it's no stopping China. They got too much momentum, but they're trying their best to slow Trump and his administration trying to slow it down. But China, remember, they're going to release their digital currency, the digital yuan, this year, and it's going to be backed by gold. And this is interesting. So we're fighting a lot of wars. It's to make America great again versus China 2025. That's the big war. That's not the small battles of all this little small stuff. All the small stuff is the people trying to divide up the pie, right? Because things is falling apart. And so all the small things, that we're seeing, those are battles. That's not the war. The war is for power. Always understand that this is about power. So anyway, I just want to give you guys insight on the big picture to keep your eyes on that, because that's long-term thinking. But with the Democrats they're going to demonize, do everything they can, because again, they're fighting for power. It happens whether there's a Republican president, whether there's a Democratic president, the Republicans, they're going to do the same thing. So in this case, the Republicans got the power. The House is trying to get that power. They're going to do everything they can to, bring Trump down. I hate to tell you, but that's what they're going to try to do. And so whether it's, the stimulus money, they want him to print up whatever. They say print up reparations, even if it's detrimental to the economy. They're going to make it say, oh, Trump doesn't want to do this, so he must be this, that, and the third, and it's all to try to get the people to vote in a certain way. At the end of the day, I had to tell people to, survive. A lot of people are not going to survive this. Okay. Again, we're in a recession right now. We predicted this whole recession back in September, actually before then, but I didn't publish the article till September. And it came within the time frame that we talked about and predicted and all that. But there was also depression that's going to come, right? Because printing money can't fix this problem. It's going to cause more problems. It's going to cause the wealth gap to continue to expand. Owners of the assets are the ones who's benefiting. Who owns stocks? That's an asset. Who owns real estate? Do poor people own stocks and real estate? No, they do not. So when the Feds print money, it's only going to make people more pissed, right? Because the poor people don't own the money. So that money ain't getting into the hands of the poor. So then on one hand, you got the Democrats is fighting to try to get that, they believe that getting that money into the hands of those people are going to help. But to get that money into the hands of the poor, you have to actually take it from the rich. So it causes a whole bunch of issues. And the only way you could do that is that you have to tax the rich more. You have to take from them. And that's not, again, they're not going to be happy with that. Now, who are the rich? The rich are the people who actually create production. They create the jobs, right? So, your broke homie, he's not hiring you, right? Some rich person, they're the one with the company that's hiring. So you need everybody, you can't make everybody just even, because it kills the incentive to produce. It kills the incentive of being an entrepreneur, which is taking risk. The reason why you're supposed to make money, the reason why you're supposed to make a big reward is because you're taking risk. The reason why stockholders are making all the money, because they're taking their risk and investing their money into this company. And the company fails, you good, but the owner, he has to bear, the consequences of it. He's taking a lot of risk for starting that company. Same thing with the investors. And so therefore their rewards are greater. And the majority of the poor, they're still poor because they don't understand this stuff, man. This is why we got Wall Street Jack Boys Academy, so that you can learn. And then it's your choice to participate in this system that we all live in, which is called capitalism. And in order for you to make money, you have to take risks. My mother always says, son, you can't win the lottery if you don't play, right? So if you're not participating in this, with all the things that's happening with the wealth transfer, again, stock market was up over 30% last year, that's money you didn't have to sweat for. So are you going to be mad because, we made money in the stock market and you didn't? You want to sit at home and watch Netflix. You want to sit at home and watch all the TV shows, and we're studying the markets, right? And see, that's some of the problem with socialism that the young people don't understand, and that it tries to create something that naturally doesn't exist, which is equality, right? Equality doesn't naturally exist. Fairness is different from equality, two different things. Equilibrium is different from equality, right? You can't make people equal, right? If I put in more time to study, if I put in more time and I take risk, I'm supposed to get a reward. If you didn't do it, then that's your problem, right? So you have to say, like, even Mike Jones had a song. He said, if you don't grind, you don't shine. If you don't, I can't remember, something like, if you don't work, you don't eat. That's what it was. Yeah. If you don't work, you don't eat. And, before I even came into the markets and the streets, I've always lived by that principle. If you don't work, you don't eat. What make you think I'm gonna just give you something, right? I'm out here grinding in the streets, putting my life on the line every day, right? And so when I was, we made money, and that was my reward. I took on risk. And that could never be equality, because they're going to be people that's going to take risks, and there's going to be people that's scared to take the risk. You're scared to jump off the porch. I jumped off the porch. You didn't jump off the porch. Our reward cannot be the same. So anyhow, you're going to have a lot of these things that's going to be politicized so that people can get power in politics. At the same time, U.S. stands at great risk of the socialist policies that's coming into place, like universal basic income, right? Universal basic income. That's one of the things they talk about, right? Where the government is just going to pay for you to sit at home, chill, and watch Netflix. You got to be careful of these things, because if the government does that, they're going to want control. It's like doing a deal with the devil, right? My mom used to always say the devil give gifts, right? My pops, he's in here, right? He's in the chat with us, right? They always say the devil give gifts too, right? But when the devil give gifts, when he come to collect, though, he coming to collect. He ain't giving nothing for free. And he gonna take 10 times what he gave you. So, that's what we have to deal with the socialism, right? When the government says it's giving things, well, first of all, the government don't make money to give anything in the first place. So it has to create all these, this robbery that's legal for them to even do so. And they're gonna steal your freedom, and you're never gonna get that freedom back, right? So when the government takes freedom, you never get it back, right? Think about the federal income tax, right? Why do you have the federal income tax, right? So that because they needed to finance the war, right? And it's supposed to be to pay for the war, right? How many years? It's 2020. We're still paying for a war that we should have never even been in the first place, right? And that takes from your freedom. That's money that should be at your paycheck, but you can't because you have to give it to the government because they wanted to, finance wars. We wasn't in that war. This is before we were living, right? So this is the type of stuff we talk about with them taking freedom, right? Also with lockdowns against your will and businesses going out and stuff like that. So, just be careful. I just want you guys to have a understanding of the economic side, which is the macro view and the micro, and then what we have going on in the markets, overall picture, so you can navigate through the market. So I really hope you guys enjoy it. With that being said, I'll open up the Q&A. We'll take a couple of names from you guys. What stocks y'all want to get an analysis on, and do what we do on that. In fact, let me actually, while y'all are getting your names together, we'll take a look at some of those stocks. Oh, here we go. Here we go. Let's take a look at the website. All right. So if you haven't been on the website, here you go. Okay. Make sure you guys get on the website, which is right here in front of you. Okay. So on the website, this is the news feed. Okay. You can see the news feed when you jump in. Make sure you check out the news feed. Okay. Bingo. You'll see this little message here that's letting you know that we have chat feature on the site. This chat bubble right here. In fact, because I got all this white on, let me actually switch this to red. All right, cool. And you see this little chat bubble right here. This is how you get into the chat room, okay? And so I just want to introduce you guys to that because this is where we will be at. Again, we're trying to adjust and so that we actually do not need to depend on other social media sites. I built this site so that we can not only learn, but also to have the social atmosphere that keeps people plugged into the Facebooks and Instagram and what have you. And so now I've been, developing this site. And so we have all those functions. So we actually don't need Facebook anymore. So I just want you guys to know we don't need them anymore, okay? And I hear a lot of complaints from some of you guys that are just done with Facebook. I mean, it's hard for people to even speak. There's so much social unrest on there, so don't need it there. If you want to connect with like minds, this is the place that you need to be at Wall Street Jack Boys. And so we got this little chat right here. So as soon as you log in, bingo. Website is mobile friendly. You can access this from your phone. So you just click on this little chat bubble right here. And that's a chat that I have with my man Mark, but this is the chat room itself. All right. You see your man Jonathan in there, and you can go back to the chat queue. I'll be clearing this out every week. I haven't started yet, but I'll start clearing it out at the end of the week so we can, for data, caching. But this is the chat room. It's right here. As soon as you get in there, WSJB chat room, bingo, right there. So when you get to the website, make sure you jump in there all day, every day. This is where we are at. Okay. All day, every day. I am in here. Everybody else is in here. And we're, trading the markets, calling out plays. And so other companies that charge like $200 a month for this type of service. And this is free on our website. So I really hope you guys, enjoy it, but so that's the chat room. You also have individual chats so you can communicate with your peers. You see, I got a couple of chats going on with members. Okay. So you can communicate with your peers directly. And me and Noah, I'll be showing out sometimes. All right. So sometimes I gotta show out a little bit. So just taking a look at this little chat and this individual chat. You see that little video button right there? Yes, that's a video button right there. We can video call on the website. Okay, so that's a new feature right there. Well, yeah, we can video call, video chat, and stuff like that. So again, totally no need for Facebook anymore. I just want you guys to know we're still up there, but less action in that side. And because we want to own and control all of our own data, and because Facebook, they come in and start banning you. Facebook banned me for asking somebody who sold the dope, because somebody was blaming somebody on selling dope, and I'm like, well, who sold the dope? And they got me to talk about trafficking narcotics or something. I'm like, I don't do that no more. What you talk about? So anyway, the Facebook police can't get me on my own website, right? So, but stuff like that, they want to fact checking and the subjectiveness and all of that craziness. Anyhow, we got all of that here. I would encourage you guys to check out the blogs. I haven't written one since I called out this recession here, right? Because I've been building a whole lot of stuff on this website and stuff, and I really want to see people reading. So once we can get this stuff popping, if there's a demand for it, then I'll go back and start writing more. But it takes a lot of time to really come up with that stuff, to formulate it and then editing and stuff like that. But on my news feed right here, let me actually just stretch this out a little bit. On the news feed, you get all the updates, likes, and stuff like that. So I get updates. I'm updating things. This is one of the things we talked about this week. The IMF had a forecast this week, and they're talking about the growth of the economy, the global economy itself. They're down about 5 points. Okay. So they still have a negative outlook, and that was this week, right? So anyway, we post a lot of stuff, right? You're welcome, Jonathan. And we got Nike, right? Nike getting ready to lay off. So this is the place that you want to be, right? Amazon enters the autonomous taxi arena today when it bought Zoox, okay? So they're going to be competing with Uber and Lyft. And y'all know when Amazon get into space, man, they take over. It's over for you. You might as well cancel Christmas. You can't compete with Amazon. All right. They got too much capital. So they're going to get into that space. But look at that. Microsoft permanently closed the store. So in the news feed, I'm sharing with you guys, not just myself, but other, people that's in here are sharing things. So the news feed is where you want to be. If you're active, we know that you're active. We know when you're not active. A lot of people, we know the people that's active, right? And I'm gonna tell you now, people sign up, which is crazy to me. And I appreciate, if you want to donate, and we don't ask for donations, but if you want to sign up for a course and don't take the course, I mean, what I'm supposed to do, turn down the money, right? We got an organization we're trying to run. But I encourage you, if you sign up for the course, right? See, this is the courses right here. You sign up for the courses that you actually take the time to learn, right? And I do plan on doing more courses, and we'll launch more. But let me just go to the courses. When you go to the courses, this is what it looks like. You see my profile. It's just like Facebook, right? You put whatever you want to put on here, right? And so we have some courses in here just to show you guys this real quick. And if you take a look, I got my certificates. Yeah, you get certificates now. Yeah, you guys got it. Okay, there's certificates. Boom, bingo. There you go. Oh, they dope. They fire. You know what I'm saying? I'm just showing you right there. You know what I'm saying? Let me pull it up real quick. Let me see if I can pull up my certificate, if it'll show up. Okay, bingo. That's what some of your certificates look like that. Real dope stuff. You feel me? So, crap, I just lost it. So I just want to actually show you guys, what we have popping on the website. And it's because if you haven't subscribed, then you need to subscribe. And you need to get the training, definitely, because I have people that expect me to teach them, options, which is a very complicated, topic over a Facebook comment. I mean, you can't possibly expect to learn, when we have a class. Let's see, we actually have a class that's designed for you to learn on your own time, self-paced. Okay. So I've been teaching this for 3 years now. I've done the live webinars. I've done all this other stuff. And so when I designed this new course, I took all the things that I learned over the years to give you guys the best experience I possibly can give. And also to make sure I'm not killing myself with time trying to be live all the time. It's just totally unnecessary. Plus, I can deliver the value much better when it's all self-paced, right? And so we have quizzes and all of that, you know what I'm saying? So again, you just jump in from beginner as if you know nothing at all, okay? All the way to even complicated, topics. And then you have your quizzes, okay? We got quizzes and certificates and blah, blah, blah. As you guys see, this is what the coursework looks like, just for those who haven't seen it. It's no need for people to call me or try to call me and reach out and ask them, what am I getting? You're going to see exactly what you're getting before you get yourself into it. So I'm just showing you guys, some of the things here, your materials, things that you need to download, and all of that is right here in that box. So if you guys haven't seen that, okay, the lessons as I'm teaching, there are materials that you're going to want to use. You don't have to, but they're there. Okay, bingo, right? You see, I put it in. If you want to channel your inner nerd, then try this. It's not a requirement, but you can, right? Because in this Greeks class, I'm teaching you everything that you need to know, right? So you see all of that, and again, all your coursework is right here on the side. You can jump back into the social side. So remember, social aspects, and then it's learning aspects. If it's too distracting, you can just bounce all of that away. Remember, we also have the dark mode. So at nighttime, turn the light out, B. Sometimes I got to study with the lights out. So I had to be able to have that feature on this new website. So again, I hope you guys really enjoy it, man. That's that full focus mode. You don't want all the distraction. You don't want to be chatting and all of that. You just, cut that out. You feel me? So anyhow, I do look forward from suggestions for you guys. I know Jonathan gave me a couple of suggestions. I truly appreciate it, my man. I'm always looking for feedback, and so that we can, continue to improve this whole experience. But yeah, so this is the website. I just want to show you guys that. Make sure you sign up. Oh, one last thing. I'm gonna go back to your let's go to your profile real quick, because I do want to show you guys this. If you know anybody that you feel that will benefit from what we're doing at Wall Street Jack Boys, then understand that this here email invites. All you have to do is go here on your profile, click that button there, and type in the email of the friend that you want to refer. And the website does all the work for us. It's going to send an invite to your loved one that you want to, help out. So let me show you what it looks like. When I go into email invites, all you do is put in the name and put in their email. Okay. And then you hit send invites, and it's going to send them an invite so they can actually join the website. So again, I have so much stuff that I've been building on here. So trust me, I know I've been traveling the past couple of weeks, but I understand I've been working, B, and I'm still adding. I still have more work to do, because I want to, I want us to be the best. And so any way that I can help that, then that's what I'm going to do. Also, make sure you check out your achievements and your badges and all of that. So every day, certain things that you do, if you're on the website, you're going to earn some points, some achievements. I haven't unlocked everything yet, but it's a lot of things that you guys are going to be getting. So, and you see, I got to get my badge game up. So make sure y'all get your badge game popping. You feel me? Right? All the badges. I'm decorating my wall with the badges. All right. So whether you're doing quizzes, you're doing the tests and all of that, you're completing programs, you're going to be earning those things, and you get points also. So, I mean, just simple things, just being active, So anyhow, we have full support on our website. Also, just, understand we have direct inbox, direct messenger right up in there. So you can, send me a message directly. You don't even need to open up a Gmail. Again, we don't need anything. You can do all things right here on the website. Your messages, inboxes, and all that. You got your timeline, newsfeed, notifications, blah, blah, blah. It's all mobile friendly. You can learn on the go. So anyhow, you can also check the Game Plan Sundays out right here. I don't know if I'm gonna keep this on here now. I got it on there because I figured maybe people want to watch it there, but you can check it out there. Got the forums and the groups. This is the last thing, and then I'll go ahead and get us into our closing here. Let me go to, because I know it's easy for me to access it from here. You can access it from all over, but I just want to go here and show you that we also have groups that are outside of, what we are, outside of options and stuff like that, right? So we have groups, bingo, go to your newsfeed. You can go in those groups, and you can join those groups, right? So we have groups dedicated for gold and silver. You want to know who I'm buying my gold and silver for? Right here in the group. All you got to do is click that button, and it's free. Again, all of this is just benefits that you get with the website, all right? The gold and silver in there, what we're seeing in the gold markets, all things gold and silver, right? Also, if you want custom coding, you want your Thinkorswim platform to be tricked out like mine and some of our colleagues like Justin and Mia and Mark, they got always tricked out cool, things. Well, we write ThinkScript coding, which is coding for Thinkorswim itself, and we're sharing our work with you guys for free. A lot of these indicators cost thousands of dollars. So again, you got to be a member, but once you're a member, you can actually just go in and join the group. Okay. Fundamental analysis. You want to get in on the the Warren Buffett value stock investing, all of that, you want to get on your Wall Street golden boy stuff, fundamental analysis, technical analysis is in there, futures trading, everything, right? So we're doing everything. He said, keep the game plan Sunday. Okay, cool. So again, I'm looking for feedback from you guys. If y'all say let's do it, then we'll do it. But I have the power to do a lot. And, unlike other people, they pay people to do this. What y'all don't know is that I build all of this. I build the whole side, I build everything. So I can go in and do more than what other people do that's paying people to do it. They got to wait for it and blah, blah, blah. So anyhow, suggestions that y'all have, give me that feedback. I appreciate it. All right. So got a few names I'm going to cover here real quick. Okie dokie. All right. Yeah, Kirkland Lake Gold. Who's that asking? Somebody asked about KL. Yeah, that's gold. Kirkland Lake Gold. The name is in there. So that answers your question. AEM. My man Jonathan says AEM. Okay, cool. This play right here looks good. We got a triangle that's on there. And again, this could turn out to be a flag, but I like it. It's a bullish setup, obviously. If we take a look, the floor is right here. I can't use the red on this. I got to go yellow, fellas. Yellow fellow. Okay. All right. So we got the floor right here. On the moving average is right there. Price has held above that. That's how you know it. Right. It's a little miniature, little double bottoms up in there. Right. Bingo. Then you get that buy trigger. That's the arrow that says, hey, get in me right now. Okay. So I'm looking for a bounce play on this thing here. We do have upwards trend, and we got a squeeze dot that's just forming. So it may take it a little while to come into fruition, but I don't know. Last time we only had 3 squeezes. In fact, the squeezes on this stock. So again, you gotta study. Look at this. Look at the behavior. Right? Oh, what 4 squeezes? Bingo. Got to move. Okay. We had 3 squeezes. So this one likes to move off of short squeezes. If you don't pay attention to that, 3 squeezes, and then bingo, you get that move. All right. Just had 3 squeezes here. So again, 3 squeezes on this seem like it's the thing to look for. So 1, 2, get another squeeze. A third squeeze, yeah, I'll be expecting for this thing to fire long. Okay. Let's see if I can give you some targets here real quick. All right. We'll take from this swing high to this low. All right. We saw that 618. That was a bounce down here. But this is going to be your resistance level, the $65 target. So you got a good 5 points that's in here. All right. You got a good 4 or 5 points that's in there. So definitely expect to get there. And then it's going to be key to see if the squeeze is going to fire it long, or we get a move like what we caught back here where the squeeze fired long. We were able to push through that 200 moving average because the squeeze fired long. Or we see another move like that up to the $75. Okay. So again, that's going to take some time for that to play out. A couple of, months, actually. I think it's going to maybe take about a month, maybe. What else we have? TWOU. Rob, what's good with you, my man? Ron, my man Ron. TWOU. Ron is the pattern king for y'all don't know. Ron, he always got some dope patterns for us to play. This one here, let's just go ahead and get some levels on that. We got to squeeze this in here. Again, that's your squeeze setup. Targets up ahead. $40, $42. Okay, those are your targets up ahead. Trend is going up, momentum shifting up. So quite naturally, we're looking up. $40 the first target, $42 the second target. That means that's where you get out. That's a bullish trade, a bullish setup. And win. So win again, Courtney, that's going to be a hotel setup. People are betting on people traveling. Win resorts. People are betting on for them traveling. Obviously that's been falling apart. Looked like I already had some levels in here. Okay. What we had in here was, I guess, that hopes of people, opening the economy up and people will go back traveling. And we got the trigger that's here. And then again, the whole thing with more lockdowns. I just came from the beach actually, and it was pretty nice. It was laid back, but it wasn't packed like it normally is. So there are people that's moving, but it's still not good for these companies. A lot of these companies are going to just completely go out of business. So I think that's something that we got to wait for. But a lot of them are being bailed out by the feds. So again, they're creating these zombie companies. So obviously, this is going to be a bearish look on this. If you took the classes, you already know it's trading under all of these moving averages. Price is trading under moving average. That means that it's bearish. So the only thing I can see on this is bearish. It looks like I have some levels in here. And if we dial in it, let me just get in a little bit. Okay, we want to see it look like it's starting to breach through these floors. So as it breaches through the floors, then we can remove those, and you have more levels underneath it, right? So it's breaching through these floors right here, and this will be the next level zone. So I don't know if you're looking for it to bounce or not, but you want to wait to see if it holds a floor level and then trade sideways off that level and then begin to leap if you're looking for anything long. Other than that, this is bearish. This is short. If you're not shorting it, stay away from it. All right. So with that being said, we'll go ahead and bring this session to a close. I appreciate everybody for stepping in and joining. But definitely, hold on 1 second. I got one person on YouTube. Do you think I should buy on the dip next couple of weeks or wait it out until end of the year? Holla Pro, I do want to make sure I tackle your question here. Do I think that you should buy the dip? Now, I think that, when he's talking about is buying a dip on the S&P 500. And so let's take a look at the, I like to look at the ES here. It's pretty much the same thing. So again, you say buying a dip. I don't know where this is going to go at, in the future. What I look for is setups. Okay. And so what I'm looking for is a setup. Obviously, I don't want to buy it. I don't want to buy nothing that's too expensive. The key is to buy low and to sell high. To buy low, sell high concept. You're talking about the buy the dip thing. What is the dip though? Again, we don't know what the dip is going to be, but what I would like to see if I was to, have a bullish analysis on it, it would be say if this falls here, okay, and it comes here. Price comes down to this level. Price starts chopping around at this level, okay? I know a lot of people like to say they like to average down, they buy it on the way down. To me, that's stupid, okay? If you know what you're doing, then you don't need to blindly buy on the way down, okay? If you know what you're doing. If you don't know what you're doing, then I can see that. But if you know what you're doing, we got levels. Let it hit the floor. Now, it can't just hit the floor. It's got to bounce and test it and let you know that it's a clear floor. Then you start to see it bounce up. That will be a trigger to get in, right? You say, oh, it's trigger to get in for some trading, not long-term investment. Long-term, I am negative on equities because of this whole play out. Fed's printing money. Okay. We have the recession that I believe is going to turn into a depression because I don't believe that the monetary policy is not working. Fiscal policy is helping the monetary policy. They're doing things that they have never done before on levels they have never done before to try to get this thing right. And it's still not getting the impact, the stimulation that they want. Again, you got 40 million people that's out of work. Where's the S&P 500 going to make this earnings up at, right? Okay. When investors are buying long-term, you're buying in hopes that these companies, whatever they may be, are going to be able to deliver value to you as an investor. Okay. Where are the people spending the money? Okay. So all the stuff we're talking about right now is pretty short term. Long term, this is not going to end well. It's too much risk. Okay. A lot of companies, we haven't actually felt the pain yet. Like this right here to me was the appetizer. Okay. We haven't felt the pain yet. My kids don't even know we're in a recession. Oh, we're in a recession? Yeah, we're still in a recession, right? Because, the Feds have been, again, everything is to keep confidence in. So everybody's, still living and spending money like there's no tomorrow. And I told you guys in even my article from September of last year, I was saying no more spending. Save like it's the end of the world. That's what I was telling people, right? And here we are in a full-blown recession. If you listen to that, you'd be in a much better position than you are in today than most people, right? And buy gold and silver, right? And you see how well that has been doing. So long term, again, still, pessimistic on the markets itself. I think that the markets are not pricing in the fact that Trump can lose the election. Now, I was listening to Bill Ackman. I call him the Wall Street Golden Boy. They were asking him in an interview if the stock market, no, it was asking him, does he think that the market is going to continue to move up if Trump loses the election? And he said it doesn't matter if Trump loses the election or not. The market is going to, continue to move higher. That's what he was saying. And you listen to Trump, he'll tell you, man, if I lose, it's going to be, mayhem. Now, I believe that if Trump loses the election, then the market is going to puke. Okay. And the reason why is because of the socialist policies coming from the Democrats and the left, the liberals, are going to be to tax the rich, tax corporations. You remember Trump did tax cuts, okay? Permanent tax cuts for corporations. Where do you think we got all of this movement in the markets from? Okay. Let's go back on a weekly chart. Okay. In fact, let's go back to a monthly chart. Let me just show you this. Let's go back to the monthly chart. I'm going to go back a couple of years here, right? When Trump hit the office, okay? This is where the markets pumped up. Now, GDP has not been growing, okay? GDP has been around, 2.5%. So America has not been able to produce much of anything. We've straight up turned into a service economy. And this is the reason why China is a great threat. All right, you have to produce good. Consumers will never outlive producers. So producers always outlive consumers. America don't produce much of anything nowadays. The GDP was stuck at 2.5%. The only way we was able to get this popping is because Trump cut those taxes. Okay, if you look at all these companies' earnings, they credit those high profits returns because Trump's tax cuts policies, right? So the tax cuts have did this. We got this ripping here because the Feds have raised the the interest rates, right? So when they was messing with the interest rates, it's cause that. So from that perspective, I can't see this thing being positive. And if we go further back to the recessions in the past, pay attention to how long they lasted, okay? Look how many years they lasted, right? So this is the Great Recession, all right? So that was, again, at least a year. And then we go back here, right? Look at the time down here. This is the time, right? It's about 3 years or so. So if we go even further, right, we can go all the way back, we can go all the way back. Geez. I have to zoom in on all of this. But let me see how much time we got. Oh, I'm already over my time anyway. But if we go further back, we'll see on average these recessions last for years. Okay. On average, we see that they last for about 2 years. Okay. So you can go back and you'll see that, they normally last for about 2 years. So again, the IMF came out with a projection, this is bad. It's not just the US, it's the whole entire world that's messed up. So that's what makes it complicated to calculate this, because we don't know who was all laying in the bed. So you got to see who's going, you got to catch them, with their pants down. Okay. Which countries, not just companies, but countries with their, the pants down. They're trying to cover it up now. But when the poop hits the fan, it's going to unfold, in a not so positive way. And so we got countries to bail out. I mean, this is massive. All right. The key is to dupe everybody and think that, oh, everything is fine. Right. And so they have been successfully able to manage to reinflate this bubble, right, back to this level. So, that's why you're not seeing people that's, moving like we're in a depression yet, right, or in a recession, although we're going to go into a depression. So I'm calling for a depression. And because of that, I am pessimistic on the market as of right now, and I am bullish on gold and silver. So I just want to give you, that's my train of thought. Gold and silver is going to be the best bang for your buck. Hard asset. Forget about the paper. Physical gold and silver. All right. So yeah, that's it. So, all right, everybody's been taken care of tonight, man. All right, cool. Thank you guys for joining on the YouTube side and the group side. We're here every Sunday at 7 p.m. I'll see you guys next week. Peace.